Can a small Nanjing tech firm help revive IPO pipeline for Chinese companies to raise funds in the U.S.? Smart parking systems provider IP International Holdings may serve as the canary in the coal mine to determine whether Chinese companies can confidently resume efforts to go public in the United States, according to analysts, following ride-hailing giant Didi Chuxing initial public offering debacle in New York last year. 4-year-old IPO, based in Nanjing, capital of the eastern coastal province of Jiangsu, last month updated its filing for an IPO on the Nasdaq stock market in New York, where it plans to raise $27 million and become the first Chinese technology company in more than 6 months to list in the U.S. The company, which was set up under a variable interest entity structure, would also be the first Chinese tech firm to go public overseas since Beijing regulators gave tacit approval for VIEs to list in offshore markets. VIEs typically allow overseas investors to share profits generated from businesses in China based on special arrangements, bypassing laws that otherwise ban investment by foreigners. It is possible for IPO, which was incorporated in the Cayman Islands, to get the green light for its U.S. listing from the relevant authorities as long as it satisfies existing regulatory requirements, according to John Dong, a securities lawyer at Joint Win Partners in Shanghai. Even if IPO's IPO on the Nasdaq goes ahead, Dong indicated that it does not mean there will be a full resumption of China tech IPOs in the U.S. There are still many uncertainties, he said. These include the attitude of regulators, companies' control on the cost of compliance, and the capital markets valuation of companies. Things may not be in a very clear direction for quite a long time. IPO did not immediately respond to a request for comment on Tuesday. The stakes are high for IPO in light of Beijing's intensified review of overseas fundraising activity by companies in certain industries that are off limits to foreign investment. China's process for approving IPOs in foreign capital market requires an additional layer of oversight, with the Cyberspace Administration of China formally inserted into the procedure. Beijing revamped its rules for overseas listings after Didi went ahead with its $4.4 billion IPO on the New York Stock Exchange in June last year, despite warnings from regulators that triggered a data security investigation led by the CAC, which culminated in Didi move to delist in the U.S. in favor of Hong Kong. China negative list tightens grip on overseas IPOs by strategically sensitive firms. The size of IPO's IPO, however, might be too small to raise Beijing's concerns regarding data security, said Doug Young, a commentator with Beijing-based consultancy and information provider Bamboo Work. The underwriter for that offering is also a second-tier investment bank, Boasted Securities, according to an online commentary published by Young last week. A return of the big investment banks will mark one of the next big milestones for these U.S. listings by Chinese firms, he said. Founded in 2017, IPO posted total revenue of $2.8 million for the 6 months ended June 30 last year, according to its U.S. filing. That was generated from operating intelligent parking systems installed inside 42 lots located in 18 cities in the world's largest car market. IPO's single largest shareholder is a Chinese individual named Jin Weiming, who first told local media about the company's U.S. IPO plans in April 2020. Still, IPO warned in its recent U.S. filing that Beijing's enhanced scrutiny of overseas listings, including any additional requirement for approvals, could impede its listing at any time.